Hello, it's good to be with you again, and today we'll be talking about sources of funding for startups. Now, if you recall, we've already discussed if you really need to take a loan as a startup. And if you also recall, we did discourage you from doing that. It's not the best thing to do. And one or two suggestions were proffered regarding how else you can raise money for your startup. And today I'm going to take a deeper dive into that by giving you other options and talking about them a little bit in a more detailed fashion. Now, for those who didn't watch the episode where I, so to speak, completely discouraged startups from taking loans, I'll just quickly rehash. The reason you don't want to take a loan as a startup is because usually the payback can be very strict and stringent, and the conditions not very easy to meet, even if you're lucky enough to get a loan that you're paying back at single-digit interest, meaning that it's less than 10% interest. And usually for you to find that kind of loan, it means that it has very good backing from the federal government, which is why, the payback conditions are so soft. With most commercial banks, you're going to pay that loan back at an interest that is double digit and possibly up to between 20 to 25% interest on the loan. So that's quite a bit. Also, recall that you will not take a loan just like that. For those of you who are not familiar with the process, you'll have to bring a business plan, which is a good document to have, even if you're not planning to approach a bank for a loan. It's good for you to have a business plan, draw it out properly, know the strengths and weaknesses of the business, and so on and so forth. That's very important. It's an important document to have. Many startups don't bother with it, but I suggest that if you want your startup to become an established business, it's something that you need to have, okay? So banks asking for that, there's nothing wrong with that. But they're also going to ask you for a collateral. A collateral is something you give them in case you are unable to pay the loan back. This could include your house, land, and things like that. Very precious property. Worth the loan. Because they'll come and assess, and they'll be certain that the property exists, they'll be certain that it's yours to even use to take a loan at all, and so on and so forth. And they'll also need to be certain that that property you're giving them in lieu of that loan is worth as much money as they're giving you, if not more. Now you run the real risk of forfeiting that property in the event that you're not able to pay that loan back. So that's another reason why taking a bank loan as a startup might not be your best option. Then again, remember that banks are also working with other people's money. The money that banks use to do business and things like that it comes in from depositors. It comes in from people like you and me who trust them with our money for a period of time. So they really can't afford to take too much of a risk with it because they can't come scratching their head when a depositor comes to withdraw some money from the bank. This has happened in Nigeria before. We've seen banks go under as a result of mismanagement and so on and so forth. It's not something I would wish on anybody. So, as a result of the fact that they're using money that is originally not even theirs, they have to be strict. They have to be really, really strict. And here you are, relatively inexperienced. You're just starting out because you think you've done your feasibility studies. Feasibility studies is different from your business plan. Okay, we'll look at all these other documents in good time. A feasibility study is a document that helps you to tell us how it's a document that is put together after research has been carried out into that particular venture you're hoping to go into, to tell us how profitable the venture is. That is what a feasibility study is. So they're going to require that as well, and so on and so forth. And then many startups are a one-man business. Sometimes you don't even have a staff of 2 or 3, and all the work is on you, along with whatever risks you're taking. They're all squarely on your head. So I recall a time, I've had my experience with loans. I've had my experience with loans as an inexperienced person. And it's from that I'm drawing on to tell you that if it is a startup, don't go near a loan. Just don't. We got these soft loans worth about 1 million naira each years ago. And people were running to start poultries and, all kinds of things. One person went into rice. Another person went into tomatoes. Most of us went into some form of agribusiness or another, with the majority putting their money into poultry. That was the year that Nigeria experienced a bird flu like never before heard of. And since these were all startups and many of them had literally no experience whatsoever with running a poultry at all, well, needless to say, after 6 months when it was time to start paying those loans back, many people didn't have anything to draw on to pay those loans back. And these were single-digit loans, micro loans, so to speak. Well, not micro, but small loans, so to speak. Many defaulted. Through no fault of theirs. It wasn't even a question of being irresponsible. For instance, nobody could have predicted what happened with the bird flu that year. It was the worst ever crisis of bird flu in Nigeria at the time. So these are some things you need to bear in mind, which is why if you're just starting, forget about bank loans. So I've now told you what to forget about bank loans. What then should you be looking at? You should certainly consider government grants. There are a lot of government grants that people don't ever get to know about. And the opportunities are there, they're published in the newspapers, on the national television, Nigerian Television Authority most of the time. And because for some weird reason, maybe people are not really excited about the particular government in power at the time, they stop watching NTA, they stop reading the papers, it's all propaganda. But that is where you also get news about what the federal government is doing that you can key into for your own good, regardless of which party is in power. That should not be your business. That shouldn't worry you. Whatever it is they are doing that is not right or you don't agree with, there are usually opportunities year in, year out for people to benefit from, as at federal level, sometimes at state, sometimes even at local government levels, particularly for small businesses. And many people don't even know that these grants exist. Sometimes they are grants, sometimes they are very soft loans, especially for agriculture or agribiz of any kind. So you need to educate yourself, keep yourself open to learning about these opportunities so that you don't miss out on them. They're not meant for people in any particular political party. They're meant for Nigerians. And as long as you're a Nigerian you should not shoot yourself in the foot by missing out on opportunities that could improve your life. Okay? So by all means, find out what sector are you in. If you're a small business owner, what sector are you in? Are there grants for this particular sector? Read the papers. You can even read them online nowadays. Read our local papers, especially those with a national overview. Watch NTA specifically. I'm not saying this because I worked there. NTA is where you'll get everything that federal government is doing. Yes, it is the government's mouthpiece. So if you want to get authentic information about what the government is doing, that's where you need to go. And this information is out there, and many people don't even know that these opportunities exist. In fact, sometimes there are whole billboards that nobody looks at. And so don't say, they've come up with this opportunity now. It's only their cronies that are going to benefit from. Go and try. It's better to try and fail than not to try at all. That's how so many people have gotten things to happen for them, and you won't even know. I know that things are not particularly easy for anybody, but I would say that quite a number of us have one or two relatives that are somewhat well-to-do, that might be willing to invest in you if they know that you are hardworking enough, if they know that you are serious, if they know that you are a disciplined person and you have a work ethic, and if you've had a cordial relationship with this person. You can approach that uncle or aunt. Sometimes it could even be your parents. You don't want to disturb them, you don't want to bother them because they're pensioners now. I think most parents, most families would love to see their young ones, excel. So if you've had or maintained a cordial relationship with your family members, or maybe even family friends, or just friends, you can approach them and say, hey, listen, I've been looking for work now for about 3-4 years, nothing is happening, but I did come across this idea. I've done my feasibility studies, here's my business plan, and I think that if you're willing to support me with a small grant of 500,000, I should be able to do this, and this. Now, that person might not be able to give you 500,000, but if they give you even 150,000, it's something, especially if you're serious. It's something. And you don't need to approach only one person. Now, with family and friends, don't approach them from a place of, oh, I need a loan. Just ask them to please help you to get started. And this is where your social capital matters. If you have been respectful, if you have had a cordial relationship with these people, if they know you as somebody who is ordinarily a disciplined person, somebody who applies him or herself to what they say they're going to do, you'd be surprised. You might even raise more than you originally hoped to get. So that is another one to look into. Family, friends, and so on and so forth. Okay? Now, number 4. This one is coming so much further down the list because very few people are able to save. And if, for instance, you're somebody who has finished school and you've never had the opportunity of working at all, then the aspect of personal savings might not really work for you. Because you just don't have money. You don't have money stored up anywhere. Yeah? And even for most salaried workers, it's very hard to save. Except if you lead a very disciplined life, you have a strong sense of fiscal discipline. As soon as you earn that month's salary, you take your 10 or 20% out of that and put into a savings account that you don't touch except there's something really urgent going on. If you don't have that kind of ethic, then this piece of advice around using your personal savings might not work for you. So I'll just use this point to reiterate that if you are working, these are some of the mistakes I have made and learned from. So I'm not coming at it from a place of somebody who is this personal financer. I'm talking mostly from personal experience and also from a sound knowledge of financial stuff, yeah? If you are working, even if you are earning only 20,000, make it a habit. Make it a habit. Take it in your mind that you could be earning less. Take it in your mind that you could be earning less. So if you're earning 20,000, assume that what you're really earning is 18. Put 2,000 aside, unfailingly, as a matter of course. It's not about how much money you are earning. It's about how well you have worked on your mind. Because you could be earning 50,000. You're unable to save because you have all of these challenges and issues and whatever going on. Okay, fine. You start earning 150,000 and it's the same thing. Now your taste has gone to a certain level. There are certain things you can't be seen wearing. There's a certain neighborhood you don't want to live in, and so on and so forth. So your capacity to save is not so much about the money in your hand as your mindset. So if you do have personal savings though, that's a beautiful one. You can take your personal savings and then still approach family and friends and tell them, okay, I managed to save 180,000 naira, but I actually need 700,000 to get this business off the ground. Can you help me? You might get lucky. You might even make up to 1 million if you've had a good relationship with these people all along. Okay? You'd be shocked. Your mother or your father might be willing to go and borrow money somewhere and come and give you and bear the brunt of paying back. So that is where relationships and your social capital begin to pay off. So that's it with regard to personal savings. Last but not least, I'm trying very hard not to use highly technical financial terms, but there's no other way to refer to these people other than the term that's used for them, which is venture capitalists. A venture capitalist is somebody who is willing to bring money to invest in your startup because it is either highly innovative. Usually it has to be highly innovative for anybody to want to take that kind of risk. So it is highly innovative. You've done your feasibility studies and they've seen that yes, this product is moving or it will move. So the venture capitalist comes in with the money, but will take a share of the business. And this is where you need to be careful. Because if you are unlucky enough to come across somebody who is a business person and also happens to lack a conscience, there's the very real possibility of you being squeezed out of your business and the business being completely taken over by this venture capitalist. It should not happen. It is unethical, but there's a lot of unethical things that go on in business that you need to keep your mind and eyes open for. If you are lucky enough to meet one of these really big guys who've made a lot of money, let's say an Otedola or a Dangote, and you're coming with something to the table that is really, really interesting, sometimes you could get lucky and they just buy it up and pay you off, if that's what you want, But then again, remember, when you're dealing with people that are really that big, you need to grow eyes in the back of your head because, like I said, you can't be too careful. So these are some of the options revolving around how you can raise money for your startup I hope it has been useful for you, and I'll see you again next week with more valuable information around self-improvement, how to earn money either online or with your physical business, and other useful tips for putting money in your pocket. Always like, share, comment, and please don't forget to subscribe, because that is how this channel grows.